financial services firm Afrinvest has released a new report on Nigeria's banking sector, which also takes a look at the wider economy. The report, titled Resilience Amidst Endemic and Pandemic Constraints, looks at the global and domestic economic triggers impacting Africa's largest economy. Joining us to discuss further is Deputy Managing Director at Afrinvest, Mr. Victor Ndukauba, who is here to talk about the report. Good morning, sir. Thank you so much for joining us.
Good morning, Rotus.
Excellent stuff. So since the word resilience is in the title of this report, and we just got third quarter GDP figures, how would you describe economic growth in Nigeria? Resilient?
Indeed, I think it's resilient. First of all, we want to say that considering the backdrop of the COVID-induced recession that we experienced in 2020, we've seen the economy essentially crawl its way back into positive territory in 2021. And I think, within that context, and then looking at how the banks performed when you put their numbers all together, the fact that they were still profitable, revenue still grew, I think that is essentially the main reasons behind the word resilience.
Okay. Excellent stuff. As far as your report touched on COVID vaccinations and economic impact, what's the read on that from your report?
So as we also sort of did allude, in 2020 we saw a total lockdown in the global economy starting in March, and that did not necessarily lift off until the tail end of September. So we had nearly 2 full quarters where essentially the global economy was shuttered. But things did not begin to pick up until we had the breakthroughs in vaccine technology much later in the year, close to the final quarter, and then by January of this year, when various nation states began to then roll out vaccine programs, we began to see the lifting in economic activity to coincide with that. Of course, the other factor clearly being the level of investment by various governments, through stimulus packages to also further bolster economic activity, because clearly a lot of businesses were not active. That's really what it is.
Gotcha. Your report also touched on elevated price levels, inflation. What's your read on that? How do we get that down?
Indeed, it's I think for Nigeria it's been a challenge managing with double-digit inflation. Thankfully, it's been on a downtrend for I think 7 going on 8 months now. But however, it remains a big challenge to the entire global economy. We've seen the US, for example, breach 5%, approaching 6% inflation. I haven't seen that in more than half a decade. I don't ever think I've ever seen it. US inflation, long-term inflation is about 2%,
right,
on average. So this is very unusual times. But I think it's also not unexpected, given the level of quantitative easing and just the sheer amount of cash that needed to be printed by systemic central banks across the world. And then, of course, there is other sort of operational challenges that are associated. COVID imposed a lot of restrictions, which in itself impacted a lot of value chains. So from manufacturing capacity that was shuttered, that is slowly picking up, which in itself constrained output, to the global logistics chain. So the entire shipping and maritime industry, port operations are only just beginning to open up. So a lot of the backlog associated with those flows, logistics challenges, activities at the manufacturing level, raising, output, is what we're now beginning to see feed through higher inflation, basically.
Speaking of inflation, cooking gas prices in parts of Lagos, Ogun, I think 9,000 naira now, approaching 10. What kind of impact does that have on the festive period in your?
It's a tough one, I must admit. But again, it's not unexpected. So what drives cooking gas? Cooking gas is basically LPG, liquefied petroleum gas. It's one of the byproducts of the extractive oil industry. A lot of it, unfortunately, isn't produced locally. We still depend to a large degree on imports. And so therefore, with constraints in the global value chain and the rise in commodity prices globally, we've seen where oil is, and being a derivative of that, you can expect that clearly, if the base currency if the base price of this product is rising, then it will have a knock-on effect. And then, of course, there is the ancillary, but ever clear and present challenge with FX. We've seen a significant devaluation where we've gone effectively from about 360 about this time last year to currently, officially around anywhere between sort of 413 and in some cases 450, depending on who is accessing FX.
Right.
In the parallel market, we've seen that even worse, north of 500, approaching 550 now. So those two factors particularly contribute to what is effectively a much higher price of LPG. That is a problem. Unfortunately, going into the festive season, what are the odds that it would moderate, except we see a significant push, perhaps maybe on the part of the NNPC, who, for to a large degree, is the single largest importer of refined products. That might help ease the constraint, but it's a supply-demand mismatch, and it's unfortunately not likely to moderate in the near term.
Your report touched on the trade deficit. I think it's 5.8 trillion or so for half year 2021. You're projecting, I think, a $9 billion in the report's trade deficit for, I think, full year. What's metrics behind that?
So apparently that actually the number 9.1 billion actually speaks to the current account deficit, and incidentally, or should I say on the positive note, is actually a much better performance compared to the deficit we saw earlier, which is about 18%. So it's cut it in half, 17.1%. I beg your pardon. So it's actually shrunk in 2021, ostensibly on account of much higher pricing for crude oil prices. So that has helped significantly. But having said that, it's still not quite where we would like to be as a country. Typically capital flows in Nigeria, or sort of the trade balance, is one where it is positive. Historically, up until the last 2 to 3 years, where we've been challenged on account of weaker revenues, FX revenues. But oil prices recovering, we think perhaps there might be some respite for the country, and hopefully, with the right policy, combination of policy, initiatives from the central bank and the right fiscal tools, then we might begin to improve the odds for Nigeria.
Does that also apply to, I guess, foreign capital inflows as well? Same story?
Same to a large extent. Capital flows essentially are driven by a combination of policies, monetary on the one hand, which is within the purview of the central bank, and then increasingly fiscal policy. So what does the country signal, or what sort of signals does the country's fiscal managers, in this case the Minister of Finance and the government itself, in terms of what it intends to achieve? Those two factors will typically combine to determine what happens to flows. Unfortunately, it's not been very, very good. In the last 5 to 6 years, it's been severely challenged. We've seen long-term capital, or what is called FDI, foreign direct investments, decline quite precipitously. As of 2014, we were clocking anywhere between 10 and 14 billion dollars on that alone. Now it's sort of at best less than $1 billion. That was somewhat counter-weighted by improvements in private portfolio flows, which are typically the monies that chase yield in Nigeria. So your likes of T-bills and bonds and the likes of that. That has also declined quite a bit, and I think it's usually down to one thing. It's really the wide margin between what is the effective official exchange rate and what is happening in the parallel market. I think that distortion, that arbitrage opportunity, does not necessarily lend itself to investment flows, because by virtue of that spread, an investor is leaving money on the table, and that isn't something that lends itself to capital flows.
Very, very extensive. I had so many other questions for you, but we've run out of time, unfortunately. Hopefully, we'll have you back to discuss more. Even check out the report when it's released on Wednesday, I believe.
Wednesday, yes, indeed.
Fantastic stuff.
Thank you.
So Ndukauba, who is the Deputy Managing Director at Afrinvest. Thank you so much for joining us.